Equity Research Analyst, part of MarketSmith India team. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Here is a Nifty's daily chart taken from our website. Yesterday's candle is not updated here, but yesterday Nifty was up almost 0.7%. But if you look at the last 1 month of action, you can see that Nifty has been in a downtrend momentum after making an all-time high above 26,000 level. It started to fall, starting with profit booking. It followed by selling pressure. In the process, it breached 21, 50, and 100 DMAs. 50 DMA has acted as a little support for the index for a period of 2 weeks, but it was not enough for the market to hold that level. That was followed by 100 DMA breach as well. Historically, 100 DMA has acted as a very good support for the markets. Last October in 2023, also we have seen Nifty breaching 100 DMA, but that was for a period of 2 weeks. So we might see similar action happening to currently as well. And in this year, in the month of June, we have seen a sharp sell-off in the month of May or June around this candle. But that was followed by next session reclaiming of 100 DMA. And for the last more than 1 year, Nifty has not tested its 200 DMA, which is a long-term moving average, which is a very positive sign. Nifty trading below 50 and 100 DMS is not a positive sign if you look at for the investing purpose. And from the market status, according to the O'Neill's methodology, we are in a correction because as a Nifty reached its 100 DMA and it was not able to reclaim that 100 DMA, we changed the market status to correction recently. And yesterday's action will be considered as a day one of attempted rally because the Nifty index closed positive for the first time. If you see Friday's low not breaching by the index in the next 2 sessions, that is in the today's session and tomorrow's session, we will be changing the market status to rally attempt. From rally attempt, we'll be looking out for a follow-through session to change the market status to confirmed uptrend. Follow-through session is when Nifty advances 1.2 or 1.5% or more on volume higher than the previous session. This signifies that fresh buying has started to come into the markets. Coming to the model portfolio, we have started to exit a few stocks which are not performing well, and we will do the same going forward as well. And coming to the new additions, so the portfolio will not be done in the correction phase. Only when the market status improves from here, we will be starting to add stocks to the model portfolio. Coming to the key news section, we have seen companies start reporting their September quarter results. Bharthi Airtel, a leading telecom operator in the country, has come up with the numbers for September quarter. Revenue for the quarter was up more than 7.7% to 41,000 crores of rupees. Profit on the other side was down more than 13% to 3,500 crores of rupees. EBITDA margin has seen a sharp expansion of margins, nearly 130 basis points, 300 basis to 53.1%. Federal Bank has come up with the numbers as well. For the quarter, net interest income, which is a very key parameter in the finance sector, has increased more than 15% to 2,300 crores of rupees. Profit on the other side was up more than 10% to 1,000 crores of rupees. Asset quality has seen a good improvement for the bank as gross NPS have fallen 2 basis points to 2.09%, whereas net NPS have fallen 3 basis points to 0.57 sequentially. This is the theme in the recent earnings for most of the finance companies have started to improve their asset quality, which is a very positive sign on the whole macroeconomic perspective. Adani Power has come up with the numbers. For the quarter, revenue was up more than 2.7% to 13,000 crores of rupees. Profit was down more than 50% to 3,000 crores of rupees. So this stock might come under pressure during the market hours. Tata Power has executed a share purchase agreement with KHPL, that is Polo Hydro Power Limited, to acquire 40% stake in the company for a consideration amount of 830 crores of rupees. This investment will be done in one or more tranches in the equity stake of the company KHPL. Coming to today's market hours, we are looking at companies such as Adani Ports, Maruti Suzuki, Cipla, Adani Enterprises, SBI Cards, Hutco, Marico, Prestige Estates, Deepak Fertilizers, and Voltas coming up with their numbers for the September quarter. Global market update: the US market closed in the positive territory yesterday night. Dow Jones was up more than 0.65%, whereas S&P and Nasdaq closed 0.2 to 0.3% higher. Asia markets are trading mixed as we speak. Shanghai and Kospi are trading with cuts around 0.1 to 0.3%, whereas Nikkei is trading with a gain of 0.5%. GIFT Nifty is indicating a muted opening for the Indian markets. Nifty closed around 24,300 yesterday. So similar opening is expected according to the GIFT Nifty. So we might see Nifty hovering around those levels in the today's session as well. For the chart of the day, we picked HDFC Asset Management. This stock has also been included in our Diwali report, that is fresh positions for the Diwali for the upcoming year. Due to the current correction phase, or you can say weakness in the market, this stock has come under pressure as well, but it has been resilient in the current market. You can considerably when compared to the other stocks. Recently, it broke out from a stage consolidation based pattern and tried to found good momentum, but that was followed by profit booking and selling, which has been there in the markets. Currently, it breached 50 DMA, so it's not an ideal position to take patiently. And when the market status set correction, we are not advising fresh positions, but definitely a very good stock to keep the buy watch list. And whenever the market improves, definitely you can consider this stock when it comes to ideal buy range. And coming to the ratings, ratings have been very good. Number of funds have also seen a very good improvement the last 4 quarters. And consistent growth in the sales and EPS, which is a very good sign according to the owners' methodology. Return on equity is also very good at 28%. So looking at these parameters, ratings and chart, we have taken this stock in our Diwali picks. But the disclaimer or advice here is not to take efficiently, but when the market improves, definitely you can consider stocks like these for fresh positions. Thank you for joining today's prepel. Have a good trading session.